All right, let's take a look at the markets here this morning. We have a trade right now that's working on our liquidity grab strategy. Let's first take a look at what we have with news today. We have news. Hey, Paul, good morning. We have new news here this morning. This afternoon. Sorry. What you want to do before you start trading every single day is look at go to forexfactory.com. It's something we've used ever since we've opened up the trading room. It's a free service, but the reason we want to use it, if we want to strategy trade, if we want to trade the liquidity grab strategy, we do not want to trade it into a news event. So we want to shut it down 3 to 5 minutes before, and then we can turn it on 3 to 5 minutes afterwards. The easiest way to do it is you just go to this little funnel over here to the right, little tornado funnel. You check the red impact briefcase, and then I want to uncheck everything since we want to go against the USD only and apply filter. What that's going to do is going to give you the major impact news events only against the USD. So what that means is you'll see all the news events for the entire month. You can even go to calendar, hit calendar. We have the entire week of big news events. So you'll see the exact times on Eastern Standard Time where we do not want to turn on the strategy to run our entry, our stop, and our exit. Currently, the strategy took a short just at 8 o'clock here this morning, and that was okay to take a V-top, turn the liquidity grab strategy on, let it manage your entry, stop, and exit because there's no news right now. Today is February 19th. The only news we have today is the Fed minutes. So the Fed minutes comes out at 2 p.m. Eastern Standard Time, and we have no news this morning at 8:30. Typically, news comes out at 8:30. The top news events during the month would be non-farm payrolls, CPI, PPI, retail sales, GDP, Fed rate hikes, our Fed rate announcements, and Fed minutes, etc. Those are your top news events. That happens every single month. Well, we don't want to run this strategy. The liquidity grab strategy went short here this morning at 8 o'clock. This is a V-top. We have our dual trend filter that said we're only taking shorts. This is called a V-top liquidity grab 2 strategy. You let it manage your entry, your stop, and your exit. So you wait for a V-top to come in. Simply a V-top will come in with the dual trend filter. Remember, our dual trend filter we have tested for the past 30 years, being the best zone, the best zone to reverse the S&P. So we know, based upon all that data that we've done, that this is the best zone to reverse price. So if it's red, we're shorting. If it's green, we're buying. And simply we look for a V-top. After a V-top comes in, after this candle closes on a closing basis here, you can click on, a matter of a simple click. It takes a nano of a second to click it on. It will automatically get you in on an entry, stop, and runner. Now this one had first targets. Many traders use 5 ticks as their first target, a little bit over 1 point. The average run on a liquidity grab 2 trades between 4 and 12 ticks after a V-top. Most traders put it around 5 ticks and see if the runner can hold. This is a break-even +1, but sometimes the runner will hold after break-even and you get a good runner. Some traders leave the break-even +1 off, and what they'll do is they'll keep their stop above the reversal candle. This is where you have to have the stop in at, right here. This is your stop right there. That's your stop. So if you wanted to not have the break-even +1 in and keep your stop at that level, you have a runner in place right now still. This I have 3 targets, all 5 ticks. Here's another target down here. another target below that. The stop placement is very important because this is the structure of the market. These V tops and V bottoms are very important with the structure of the market. We don't need to change our methodology every month, 2 months, 3 months, every year, 2, 3. We don't have to do that because we know our zone is the best zone that catches the trend. So we're halfway there. We got the trend right. And consequently, we know when we're in a trend market or a chop market, the market can only do two things. It's either going to trend and go vertical, right? Or it's going to chop and go sideways. It's not hard to understand that. That's the only thing we have to understand as traders. Do we want to get involved in a trend market? Yes. Do we want to get involved in a chop market? No. My dual trend filter will keep us out of the chop. Chop, no trade. Do not turn the strategy on. So we can use the strategy as an order management system. And it takes the emotion out of trading. There we go, guys. Sorry about that. So this is the market structure. Can you hear me now? Is everybody okay? Paul, Leo? Everybody hear me? Derek, we're good? Hey, Derek, good morning. Hi, Bri. So, Bri, so what you want to do is we can turn on the strategy when? When can we turn on the strategy? We can turn on the strategy after a V-top comes in, only with trend zone. If trend zone's red, we're only going to look to short. So you're only waiting for a red candle reversal for V-top. You're turning on the strategy. The automatic strategy will get you in at this level. So the automatic strategy, the live fill would actually be 4140. It's got as low as 32. It's moved 8 S&P points down. The strategy will automatically put your stop in, your targets. The most important, it'll get you in an entry. Okay? Paul, we good? We understand that? Gary, we good? Brian, we good? Derek, I know you're good. Leo, you're good. We only want to turn the strategy on to manage the position only after a V-top with trend. Remember, you have to remember this. This zone has been back-tested for 30 years on thousands and thousands of trades on the S&P. It's the best zone that we've come up with to reverse price. So that means if I get a V-top that comes in and a red candle that comes in that prints, I can turn on the liquidity grab strategy. It's going to take the first liquidity grab that comes up after the V-top. Here's your first liquidity grab that comes up. The strategy will automatically recognize it. It will fire you in the trade. And it will make sure your stop is in, that you pre-placed on the strategy, your targets, and so on. Just remember, your stop can vary per trader depending on your reward to risk that you want. This is a 20 Renko bar. So in this 20 Renko bar, there's 20 ticks from the high to low. So the market structure of this V-top is at the high of this Renko bar. As long as I stay above, stay below, price stays below the market structure on this candle, some traders will even use 2 ticks above the high in case you do an M top or a W bottom. As long as that market structure holds, this market should go down. Okay? Now, when will there be a trend change where we'll shift gears and say, hey, let's only look for buys? The line in the sand is this outer edge. This is called the line in the sand, the outer edge. So right now, I know the exact turning point where this market could trend change. This is the line in the sand, the market. This is the beautiful thing about this algorithm. It tells exactly the turning point in the market. Remember, well, what did I just tell everybody? The market's not hard to understand. The one thing I learned by Larry Williams, one of the top traders, I think, in the entire world, Ton DeMark, another top trader in the entire world, and then Peter Stoudemire, three of the top traders that I learned under. Is that back in the 1990s when I learned of those guys about how the market really works and so on, they all had one thing in common. They all had a turning point in the market where you must know whether you're going to be a net buyer or a net seller. Meaning you got to not trade chop markets. If you trade chop, you're going to get beat up. Everybody can do good in trend. I don't care if you use moving average. You trade trend, you can do pretty good. They give it all back in chop, though, because they counter-trend trade the market. They don't know the trend of the market. They don't know the underlying tone of the market. Because remember, the market can only do two things. It can trend or it can chop. In chop, you just can't trade. Now, we have a failure trade that you can trade if you do want to trade in chop, which I'll explain on another video this week. But the easy thing to do with our trade room, if it's red, we're looking for V-tops, turn the strategy on, let it do its work. We know the exact turning point in the market when we're looking for buys now, or when it goes back in the chop and turn green. When I break 61.46 right here. I know the exact turning point in the market in the S&P. 61.46 will be a change in trend. It'll be a change in sentiment. So when that changes, then I'll change gears. Don't make it any more difficult than that in this trade room. This zone does the work for us. If it's red, we're net sellers. If it's green, we're net buyers. I don't care if you trade the S&P. I don't care if you trade the Dow, the Russell 2000, the NASDAQ futures. I don't care if you trade crude oil, gold, futures. I don't care if you trade soybeans. I don't care if you trade corn. Whatever you trade, I don't care if you trade the Forex. I don't care if you trade Bitcoin, the Euro. Whatever you trade, the same exact setup works. Why? Because the wrongly positioned traders are the counter trend traders. Our zone, our proprietary zone, and our proprietary Renko candle that I developed, the Sim Renko candle, it will let us know if we're in the right market to either be buyers, sellers, or don't trade, right? So it's simply clicking on, no matter click on, click it on, click it off. It comes up and real quick to manage your trade for you. Click it on, click it off, click it on, click it off. You'll want to click it on after and only a V-top comes in the market. Let it manage your position for you. Your stop is going to depend on your reward to risk. So this is a 20 Renko bar. That means there's 20 ticks in between here. You got to have it at least, you want it at least to show, you don't want it more than, you don't want it more than the 20 tick structure though. You can go 22 ticks outside of it, but you don't need it more because this is market structure on the candle. Some traders use between 15 to 20 ticks as their initial stop on a 20 Renko bar. 15 to 22 if you want it 2 ticks outside the high. As long as I don't break this structure high, this market's going lower. Okay? So don't trade it on. Don't turn this strategy on during news events. Turn off 3 to 5 minutes before, turn on 3 to 5 minutes after. Now let's take a look at when not to trade. So this is a trade that just happened, 8 o'clock in the morning. Nice trade, 8 potential points right there. It's still got a runner if you're still running, if you're stopped outside of this structure high. So that being said, let's take a look at the transition phase. When did this market transition to shorting? Very simple. These are my live room charts that I have in the room. Let's take a look. Put this beside each other. All right. Going into the trading session here, this is midnight tonight. Midnight, green. Green, buys only. So the market starts retracing in my zone, but we never got a green candle right here. Never green candle. we got a red dot that formed. These are my proprietary Renko bar type that I created. These little inner dots. These inner dots are now telling us also structure the market. So this tells us if my outer zone, which has been back tested for 30 years as being the best zone of reverse price, it should reverse price right here. And we should get a green candle and it should go up. Right? If we got a green candle in anywhere inside the zone or outside the zone, if we're green, but it did not, did it? What happened was we came in and formed a red dot. Or this is my proprietary Sim Renko bar type. It formed at 5:33 and 18 seconds this morning. So now this was green-red. Why is it green-red? Green-red because look, my outer zone, check this out. Don't make this difficult. My outer zone is red, green. My inner dots are red. Doesn't agree, does it? That is called a chop market. It stays this way until this candle right there. So in here, you are chop. Sometimes it will stay in chop for hours where you don't want to trade. Went into chop right there. No trade zone. Sometimes, like I said, it will stay there for an hour or so where you just don't want to trade the system. So what happens is that's chop, no trade. Why? Because I agree. Remember, the market can only do two things, trend or chop. Don't make it any harder than that. Either we're trending or we're in a chop mode. That's it. It's either black or white. Very simple. So then we turn red where? We start turning red on my outer dot right here. Look at this. Outer dot right there turned red. My outer zone. My zone says, hey, start looking for shorts, guys. We got a trend change. So what happens? My outer dot's red. My outer zone's red. And my inner dots are red. Now we have total trend alignment to what? Short the market. How do we do it then? Well, very simply. We want to catch the counter trend traders because we know they're always wrong. I've never met one counter trend trader that consistently makes money. When I was a guest speaker at the Las Vegas Trade Show in front of 6,000 traders, of all the traders and all the presenters and all the educators out there, they have one thing in common. All their software typically is counter trend trading the market. All this software that gives you all these free indicators, they're designed for you to lose. Why? Why? Because it counter trend trades the market. They're telling you to sell against a fib or buy against a fib or buy and sell against a pivot level with divergence and so on. You're counter trend trading the market. What we do is now, since we have a trend filter that can reverse price based upon lots of data, we know that is a great zone. This is a great zone. So we know if it's red, and our inner zone's red also, our inner dots, our proprietary Renko bar types red also, now we're red. We want to wait for the counter trend traders to push this market up. They're going to push the market up for us. Let them counter trend trade the market. Now what are we going to do? We're going to wait until the first hammer comes, and there's your first red candle reversal. This confirms that the market is now rolling over. You can turn on your liquidity grab trader when this happens. This, on this chart, happened when this big candle closed red. Now we can simply, if it was off, click it on. It will wait for the first liquidity grab to come in, which is right here, the first liquidity grab to come in. It will get you short, and it will manage this position for you. It will manage the entry, the stop, and the exit. Now the next trade that will happen is what? You'll wait for this market to show green candles again. On either chart, green candle, green candle, green candle. Wait for the first big red candle down. like this. You can turn the strategy on again and let it manage your position for you. Okay? So this is how you can go from a chop market to a trend market. Now, consequently, what's the difference? So if I look at this market, this is shorts only, right? Red, red. V top shorts. So LG sells, liquidity grab sells. Well, what if it's green, green? Remember, the market can only do two things, trend or chop. Green, green means what? Well, check this out. That's when it was green, red. This is chop. You do not want to turn the liquidity grab trader on and chop. Liquidity grab 2, that is. That's chop. Where's the trend come in? When it turns green, green. Now we're looking for buys only. With liquidity grab buys, buys only. So now you want to look for buys only with V bottoms. That's simple. Do not make it any more difficult than that. So what do we want to do? We come up. The counter trend traders start entering the market here. There's the counters getting in the market, red candles. Wait for the first green candle. Turn the liquidity grab trader on. There's your entry. That's a V bottom. Comes up again. Counter trend traders come in. There's another V bottom at this level also. So these are 2 liquidity grab trades right there that are buys. Now these are called sweet spot V bottoms because, so this is a V top, because you're above my inner dots, my inner Simrenko dots, so the market's strong. V bottom, V bottom. So that's called a liquidity grab trader 2. I have 2 strategies that come with the program when you put it on your own computer. We have the V bottoms, where the strategy will get long here in the first liquidity grab, V bottom, first liquidity grab, V top, first liquidity grab, right? We're only looking for shorts now. Here this morning. We got news coming out, Fed minutes, 2 o'clock. I have what's called a liquidity grab 1, or a LG1. What the LG1 can do is you want to turn a liquidity grab trader after you're breaking through my outer zone. Remember, the line in the sand I said was my outer zone. This is my outer zone right here. This is my outer zone here. Right, that's a line in the sand here. Line in the sand, line in the sand. When you break the low of that zone by a couple candles, you're going to see a yellow trigger candle that comes up. If this comes up, this is when you turn the liquidity grab trader 1 on, and it will take the first liquidity grab and get this short. So there's 2 strategies you can use. You can use it catching trades that's breaking outside of a trend change and catch this move. The potential was 41 down to 35. And here's the other one. You want to turn it on. Liquidity grab 1 here at this yellow trigger candle. The potential here was 32 3/4. Highest 57. 25 points to the upside. So I have 2 strategies you can use. I teach traders and educate traders that, hey, if you're just using the system, just go liquidity grab 2 and take only trend trades with dual trend and the targets. When you become more familiar with the system, you can have another chart that's set up and put the LG1 strategy on. That's catching these moves right here. That's catching the trend change moves, and LG1 will get you in the first liquidity grab after right here. So in other words, LG1, you can trade in getting out of chop. When it just gets in chop, you can turn the LG1 on. If you're going red, green, or green, red on my dual trend filter. but you never trade LG1 with trend, green, green, red, red. The opposite is LG2. So we have two strategies. The LG2 just trade with trend. I have the LG1 strategy that will get you in the first liquidity grab. In chop or coming out of chop for a trend change. You can use that. And when I educate, meaning the outer zone and the inner zones are green, the outer zone and the inner zones are red, or you're red, red, or green, green. Either you're in an uptrend or downtrend because you're only using LG2 in an uptrend or downtrend, and you're not, no matter what, you do not turn on LG2 in chop. Let me repeat, you do not turn LG2 on chop because LG2 is looking for the first liquidity grab with trend. LG1 just looks for the first liquidity grab in general. Big difference. So this, you just want to trade green, green, red, red. V tops and V bottoms with dual trend filter. With dual trend. That's it. That's a system that we have a very, very, very sophisticated algorithm. But it's very, very simple to execute. It's as simple as looking at the colors. If I'm red, red, I'm in a downtrend. I'm only shorting. I'm only looking for V top right now. I'm looking for another V top. Here's an 8-point nice potential run that we had so far on the V top. So what are we doing now? We're still looking for red, red. We're not going to change our bias. We're more educated than that. We know that we do not want to counter trend trade the market. We're not going to trade this counter move up. Let all the novice counter trend traders that use pivot levels, fibs, all that stuff, let them Elliott wave, catching the bottoms, tops. We'll trade Elliott wave, but we'll trade the impulse waves with trend. We'll trade the 3 and 5 wave. This is a 3 wave down now. Looking for a 5 wave coming up after we come back up for another push. You can see when these levels have a hard possible push because they're below the 50% levels. I love the ones that stop at 23% to 38% when you get a V top, V bottom. Those will typically be inside of market structure, and you'll see that market just get cranked pretty hard in that direction. In other words, you'll see a V top stop right at that 38 to 23% of this prior leg. Those are the ones that just push. But a normal setup, they'll come up to 50% retracement, and you'll get a nice rollover. Now, on news days, I showed traders last week how I can project. We were 30 points away from a top. I projected it within a point and a quarter. And we were 30 points away. How'd I do it? If you have big news days, you look at a big 5-minute candle down. I said it should stop anywhere in between 62% to 75% retracement. Sure enough, it did. It came right up to it, stopped at my level within a point and a quarter, being 30 points away, and it got drilled. So this helps traders out knowing which ones are going to be the big ones. It's a little bit more sophistication. I don't want to really get involved with that. That's something I taught early on in our trade room back in the day when we first started opening up. I'm a big fan of shallow and deep retracements. I know with news, I know the breaking point on news, when news events come out, it's 62 to 76% retracement. You can project a big candle down where it should retrace and where it should reverse. Just like you can project where these are going to go with market profile now. Right? So, but keep it simple, guys, with the algorithm. If it's green, green, we're looking for V bottoms. Red, red, V tops. You can turn the strategy on right here and let it do its work. Right? Turn the strategy on and let it do its work. Let it manage the position for you. Now, if it's the upside, for instance, if we're green, let me show you green. Here, let's do this real quick. Let's get this down. So here's the difference. So we're right here. Remember, we can only trend and shop, right, guys? So here's liquidity grab trader yesterday. What do I always tell traders? I tell them over and over and over and over and over again. Time of day trading is so important. When you're trading these markets, you have volume coming in at certain times of the day. If you're an overseas trader, it's a London Open, 3 o'clock in the morning Eastern Standard Time. At 3 a.m. Eastern Standard Time, the London market opens. You usually see some big pushes in the NASDAQ futures, some nice V-top, V-bottoms, liquidity grab trades, etc. Then you come in, the New York Open's where it's at, right? New York Open, 9:35 until around 11 o'clock. You get some really nice trades. Then it settles down, and you see the algorithms picking right back up at 12:50 Eastern Standard Time, and they like to play this market, especially with the Fed minutes today, all the way to around 4:10, 10 minutes after the New York closes with futures market. So there's good time of day trades, but I always tell traders this, always. Look for the market to window dress at 5 or 3:50 at night, right here, into the close. 3:50 into the close. Look for a nice liquidity grab buy. What did it do yesterday? The algorithms love to push the market one direction. At 3:50, it started yesterday, and it started moving. It turned green. We got our liquidity grab buy that happened at 3:55. Traders are like, why would you buy at 3:55? Oh, it's a great time to look for a buy or sell. Why? Because the algorithms are trying to push the market and take all the counters out in one direction. And sure enough, they brought it all the way up from 51.36 3/4 all the way to midnight to 57. They bought it 20 S&P points. They're catching the novice traders that don't understand it. They don't understand about time of day trading. You get some real big pushes, 9:30 to 11, real nice, and then they start right back up around 12:50. The algorithms start back up. Remember, these are electronically traded markets, guys. The pit does not control these markets. So they leave their footprint. That's how my algorithm picks it up. That's how my zones pick it up. All these algos out there, the algos control these markets. High frequency algorithms control these electronically traded markets, period. And either you're with them or you're against them. And if you're against them, they're going to take every single tick out there. And they're going to take you to the woodshed on a daily basis. If you try to counter trend trade against these high frequency algorithms, they're going to take you to the woodshed. We don't do that. We're like, okay, leave your footprint. Thank you, Mr. Algorithm. Leave your footprint, all right? If I'm green, I'm a net buyer. They just let their footprint. Trend is up. If I'm a red, I'm a net seller. No, you want to turn it on only when a V bottom or V top comes up. Use it as an order management system. On the larger Renko sizes, you can leave it run around the clock, yes. And I have that in the PDF, the members PDF, if you want to use larger Renko sizes. Shorter Renko sizes with small stops, Bri, you just want to turn it on after a V top or V bottom and let it manage your entry, manage your stop, and manage your targets. And it's easy to recognize a V top, V bottom. My zone's red. Look for the first red candle that closes. Turn it on. Watch for the V bottom, V top, turn it on, and your hands are off the computer. You don't touch it. You let it manage your entry, which the entries are fast. You're not trying to sell the bid or buy the offer or buy the market or sell the market. Your fills would be terrible. If you would try to emulate this on your own, you're about 3 to 4 to 5 ticks off. In fast markets, it could be 6, 7 ticks. That's why the computer's faster. That's why we use the computer to manage your entries. Does that make sense, Brett? You want to wait until this prints. You want to wait till that V-top prints with trend. Understand? Wait till it prints and closes. It's a matter of a click of a button. Turn it on, let it manage your entry. Wait till this V bottom closes right here. Wait for the V bottom to close. Here, turn it on. V bottom closes, turn it on. Here, it did not give it a liquidity grab. Here it did. Does that make sense, Brian? You want to turn it on after a V top or V bottom comes in on the shorter Renko size because we're using smaller stops. Now, why can't you run this around the clock on smaller Renko sizes? Why? Because it's going to catch the counter trend trades and it's going to catch the trend trades. So you don't want to turn it on unless you are in a V top, V bottom with dual trend filter trend because these are smaller Renko sizes. The disadvantage of smaller Renko sizes for all traders around the world is what? Is there's too much noise, right? Way too much noise. There's too many retracements. But the stops are great. And we love small stops. That's why you use the LG2 with V top, V bottoms and turn on with smaller stops. Now, if you want larger Renko sizes, I put them in the PDF. I give some examples on the NASDAQ futures that you can use, and the S&P. Then we ran a market replay on the larger Renko sizes, how to use it. You can let it run around the clock and even through news events. Why? They're larger Renko sizes. And you can run it through news because NinjaTrader will keep up. It won't shut down. It's a large Renko size. You know, use a 200 Renko size or 150 or 100 or 50 that's much larger than a 20, then you can trade the micros, which is 1/10 of the big contract, or if you're using prop firms money like Apex or Top Step, you can afford to let the market trade the big contract and afford to let the market wiggle some off of a larger Renko size. But if you're trading a smaller Renko size, wait for a V bottom, V top, turn it on. It's the best way to do it. That's how we educate how to do it. Okay?